Hello there, welcome to my channel. In this video, we want to look at a question on variance analysis, that is standard costing. And we are going to look at a question of a question paper of November 2024. So we are going to look at question 4 on that question paper. So our question reads, spring bedding makes duvet cover. They make duvet cover sets and sell them to all bedding stores across the country. So we're given 2 points that you need to go through. And then I believe that you're given budgeted overheads in terms of 2 points again. And then I believe that it reads at the end of the year, it was determined that the business produced 1,600 duvet cover sets using 9,600 meters of fabric. The business purchased 10,000 meters of fabric for 550,000 rands. So you need to go through the information before you attempt the question. Then you go to uh, additional actual information. So this is additional actual information that you're given. And then here you are given again actual information that is from here going forward state. And then the standard information you are given it at the beginning of the question. So all our questions, the first part needs us to calculate material price variance. And we see that we should also round off our answers to 2 decimal places. Very important. And we also take note that the question says calculate the following variances, clearly showing the formula used. State whether each variance is favorable or unfavorable. Also, a very important part that we should state whether the variance is favorable or unfavorable after calculating. So this is what we have. And then you also have to state the formula first before you start to calculate the variance. You have to clearly show the formula used. Very important for you also to take notes. So we start with 4.1, which is material price. Material price. So coming to our answer section, we are saying the first that we're going to calculate is material. Material price. So on material price variance, the formula that we are going to use is standard price minus actual price. And then the answer that you get, you multiply by actual quantity. So very important in terms of how you formulate your formulas. Remember, on the first part, we are talking about the first in brackets that you put should be a standard, depending on the variance. In this case, it's material price, so we have got standard price in the that you have to put first in brackets, and then the actual comes later, and then the answer that you get. Also, we should take note that the answer that we get, if it becomes a positive, it indicates a favorable position. And when it becomes a negative, it becomes an unfavorable. So very important for you to take note of that. So for calculation, we start by trying to locate where we have the standard price. So if you go at the beginning, remember I said information of standard, we are getting it here at the beginning of the question. That's where we've got standard. And then budgeted information, we are here getting it here. And then the actual information here as we go forward, that's where we have got actual. So we can just try to take note of that. So our standard price, if you come here, it is the standard rate. This is the standard rate, not the standard price. We leave it. But if you come here, first point, the standard price of fabric is 60 rand per meter. So 60 rand becomes our standard. So it means on the other section, We are going to say brackets. We've identified it to be 60. Then we look for the actual. We go to the actual information section, whereby we are told that the business purchased the 10,000 meters of fabric for 550,000 rands. So it means we have to calculate the actual. And how do we calculate the actual? We are going to say the total of value, which is 550,000 divided by 10,000 meters. Then we get our actual price. So basically, that's what we have in terms of actual price. So on another section, again, we can formulate another brackets, whereby now we are saying 550,000. And then we divide by 10,000. And then we get the actual. So here you can just indicate it as a small bracket, so that this one becomes a sub bracket. So we can just say, then the answer that we get, we want to have the actual quantity. So actual quantity, we have already identified actual quantity to be 10,000 meters. So it means we are multiplying by 10,000. Already, we already know that 60 is greater, so this is going to lead us to a favorable percent. So if we simplify it further, it becomes 60 minus 10,000 into 550, you get 10,000 into 550,000, you get 55. Then the answer that you get, you multiply by 10,000. Then this will lead us to 60 minus 55, get a 5 times 10,000, you get a 50,000 rands. So your final answer becomes 50,000 rands, which is favorable. How did you determine that this is favorable? It's because the answer that you got in brackets is a positive answer. So it becomes a favorable. Remember what we said when it's favorable, but the answer that you are going to get indicated in brackets is here, is positive. It becomes our favorable. So that's what we have for 4.1. So moving on to 4.2. So 4.2 is material quantity variance. So we go to 4.2, where we have material quantity variance. So the formula that we are going to use is standard quantity. So remember, we said in brackets, we are going to start with standard, depending on the variance. This one is quantity, so it's going to say standard quantity first, and then actual comes later in brackets. And then answer that you get, you multiply by standard price. Multiply by standard price. So we can try to look at the standard quantity that we are given in the question. So going back to the question, you see that the standard quantity, um, the standard quantity that we are given, if you go to the first point saying the business uses 5 meters of fabric to make one duvet cover set. So 5 meters of fabric to make one duvet, and this is the standard, of which the number of duvet are made, we get them here, which is 1,600. So standard quantity, we're going to say 1,600 actually made times the standard that is required per duvet. So 1,600 times 5. So we come here. In brackets, the actual standard quantity is 1,600 times 5, which is going to be a sum calculation inside our brackets. Then we subtract actual quantity. So we go and check in terms of actual quantity. On the actual section, we know that the number of actual meters is to determine that the business produced 1,600 duvet cover sets using 9,600 meters. So this 9,600 becomes actual. So we say minus 9,600. Then we multiply by standard price. And our standard price, we know that we have it at the beginning of the question, which is we're given standard price here as the standard price of fabric 60 rand. So we multiply by 60. And we calculate, we can try to further calculate in terms of 5,000, no, sorry, 1,600 times 5. You will get your answer is 8,000. And then what you will subtract 9,600. Already we know that we've got a negative answer inside of brackets, 8,000 being less than 9,600. So it's going to be unfavorable. So with that, we see that if you say 8,000 minus 9,600, you're going to get a negative 1,600. Then you multiply by 60, then you get your final answer being unfavorable. So it's 96,000. 96,000 was unfavorable. So this becomes unfavorable. Why unfavorable is because our answer inside of brackets is negative, or our standard quantity is less than actual quantity. So that makes it unfavorable. Then we go to 4.3. 4.3 is labor rate variance. Labor rate variance. So we have got a rate that is that we want to take into account. So we are saying labor rate. So we have labor rate variance. So the formula for calculating labor rate variance, we are going to say standard rate minus standard rate minus actual rate in brackets, and then we multiply by actual time. So our standard rates again, we try to see what we have in terms of our standard rates of labor rate. So we go at the beginning of the question, and we see that the standard rate for labor is 55. So we given it as 55 rand. So we come here. So 55. We subtract our actual rates, of which we go to the actual section, which is here. So our actual rates, we try to see the number of hours. Wait to go to the other additional information. We are given that the number of 9,000 labor hours were used at a total cost of 513,000 rand. So the total cost is 513,000. We have 9,000 labor hours. So to get the actual rate, we now say 513,000 and divided by 9,000. So that's a calculation brackets. So minus 513,000 divided by 9,000. And then obviously the answer that we get there, we multiply it by actual time, of which actual time, we get it again under the actual section where we 9,000 labor hours is the actual time. So multiply by 9,000. And then to further calculate it, you see that it's going to be 55 minus 57. So if you refer back again to the question is saying you should round off to two decimal places if where applicable. Very important. So having our calculation here, it means already we have got inside the brackets 55 being less than 57, going to lead us to a negative. It's going to lead us to a negative, which is unfavorable. Then we multiply by 9,000. So 55 minus 57, we get a negative 2. 2 times 9,000 is going to be 18,000. So no need to put a negative because you are going to give a description of unfavorable. So unfavorable becomes a substitute explanation on a negative that we have here. unfavorable. So basically that's what we have at 4.3. Then we move on to the next one. 4.4, which is labor efficiency of variance. So we can indicate it as so we are on labor efficiency of variance. For labor efficiency, I will start by putting our formula, which is say it is equal to standard hours minus actual hours, and we calculate by the standard rates. So standard hours, what we have in terms of standard hours, we go to the standard section to see what number of hours do we have, and we know that standard is here, and we see that the standard hours is that we are given that the business uses, we can come here, 5.5 hours, second point, 5.5 hours are required to make one duvet cover set. 5.5 is 5.5 hours. And we know that the number of duvet made is 1,600. So to get the standard hours, we're going to say 1,600 times 5.5 hours. And then we get the total standard hours. And then if you do that, 5.5 times 1,600, you are going to get it. We can just try to make a further calculation there and say 5.5, and then we multiply it by 1,600. And we are going to get 8,800. So that's how we are going to calculate it. So we come here. So in brackets, we say we're going to say 5.5 to get our standard hours times 1,600. Close bracket, obviously, we have a outer bracket there. Then we subtract actual hours. Actual hours, we go to the actual section, which is here. And it's a further, we've got 9,000 labor hours being actual labor hours. So the answer that we get, we subtract 9,000. So here's a subtraction of 9,000. And I'll multiply by the standard rate. Standard rates, we get it again. We get it at the beginning of our information, whereby we are given standard rate is standard rate for labor is 50 rand per hour. So we're going to take it as 55. So we multiply by 55. So as well, we can now try to simplify it further, whereby we calculate 5.5 times 1,600, we get 8,800. And then I'll subtract 9,000. The answer that we get, we multiply by 55 rand. We have already assumed that 8,800 will be less than 9,000. It's going to be in a favorable position. So if you multiply by now 55 rand, you are going to get your final answer is 11,000 rands. Being unfavorable. Why? Because we're putting a negative answer inside our brackets. Four point four, then you go to 4.5. 4.5 is a variable over its rate variance. Variable variable over its rate variance. How are we going to calculate that one? We first put our formula first, whereby you're going to say standard rate minus actual rate. Answer that we get multiplied by actual time. So you go to the question, you try to find out about the standard rate. So we try to go where we put standard information, and we now know that our standard labor hours, we put 8,500. That's our standard labor hours. And then our costs, we need to calculate the standard rate. So if you go there, this is if you check in terms of our calculation, we are saying variable overhead rate variance. So we are dealing with variable overhead. So we are saying labor hours, our standard, we have got 8,500. Then our budgeted variable overheads have become 65,000. So to get our standard rate, we are going to say 65,000 is our variable overheads, budgeted variable overheads divided by the standard number of hours. Then you get the standard rate. So with that now, I will say 65,000 divided by 8,500. So we come here, we say 65,000, we divide by 8,500. So that's how we get there, and then we formulate another outer bracket. We subtract actual rate. We subtract actual rates, of which our actual rates we fair back again. Remember, we're dealing with variable overheads, so we go to actual information, whereby we are given actual variable overheads is 68,000. And we know that the actual number of hours is 9,000. So to get the actual rate, we get 68,000 divided by 9,000. So we are saying minus 68,000 divided by 9,000. So this is our calculation. Having done this, we can now be able to simplify it further, whereby we are saying 65,000 divided by 8,500 to two decimal places is indicated in our question that round off to two decimal places where applicable. So in this instance, we can round off to two decimal places. 65,000 divided by 8,500 to two decimal places becomes 7.65. And then subtract 68,000 divided by 9,000, two decimal places becomes 7.56. And then we multiply actual time, which is 9,000. And see that the answer that we are going to get there becomes 810. Favorable or unfavorable, we see that inside our brackets we have got a positive. We've got a positive is 6.65 is greater than 6.56. So basically it becomes favorable. So we are saying favorable. Then we go to the last part of our question, which is now fixed overheads volume. Fixed overheads volume variance. Fixed overheads. Fixed overheads volume. Fixed overheads volume variance. How do we calculate it? Is first we should put the formula whereby we are saying standard time. Standard fixed overheads minus budgeted fixed overheads. We are saying standard fixed overheads. Fixed overheads are volume variance. We can figures that we are given, we can reserve it, whereby we are saying so the formula that we are going to apply is going to be budgeted fixed overheads, and then we subtract actual fixed overheads. So For our budgeted fixed overheads, we refer back to see we're given a budgeted is 56,000. Budgeted fixed overheads is 56,000. So we're going to say 56,000. We subtract actual fixed overheads, which we have is actual is here, where will be 60,000. So we subtract 60,000. And we see that we are going to get a negative 4,000. So we are going to have 4,000, which is going to be unfavorable. So basically, this becomes our last question and our last response. So thank you for listening, and hopefully the video was helpful on standard costing on the question paper of November 2024. And please, let's stay tuned for more videos to come. More typical examination questions will be uploaded on this channel. So let's stay tuned. As for this video, I'm signing out. Let's meet again in the next video.